Hi everyone and welcome to my channel. My name is Sarah Lipkowitz and I'm a real estate agent based in Montgomery County, Maryland. Today I am here with a member of my team, Melissa Clem. We are with the Homestead team of Hagen Realty. We specialize in homes and farms in Maryland and Virginia. And today we're going to talk about some financing options and things you should look into for those of you who are really stressed out about the rates but are still interested in getting into a home this year.
I think that's a great idea because the rates are going up and we're hearing that the Fed is going to meet again and perhaps increase the rates again another 75 to 100 basis points. So Sarah, what do you think that means for interest rates going forward?
So the Fed increasing the rate, generally interest rates will follow. It's not necessarily directly tied, but the trend is typically that they do follow.
That's true. How do we advise our clients, do you think, going forward on what can they do, as they're looking to purchase a home in the next, 1 to 6 months, and the rates are going up and it feels like maybe their buying power is shrinking as rates are increasing?
Mm-hmm. Yeah, I think it's going to be really, really important for people to start to shop rates even more than they have been. But you also have to start looking into some different programs, some specialty programs, and maybe get a little bit creative. So you can definitely shop rates, figure out which lender gives you the best rate, but there are also specialty programs that different lenders offer. So we have worked with lenders that have doctor programs or lawyer programs, things to help particular professionals, teachers, emergency service providers get into homes. And sometimes those rates are really competitive. Those programs are really, really competitive. But I know you had also worked with a client relatively recently that went from looking at totally updated homes to potentially taking out a renovation loan. So could you talk a little bit about that?
Yes, absolutely. So of course, many of us, when we go out looking for our first home or our move-up home, we think we want a house that is fully updated, move-in ready, looks like it could be in a magazine. And there are plenty of those houses, but they tend in this market to be extremely competitive. Those are the houses we're seeing 15, 20, 25 offers on, and it can be a house that ends up being bid up well above appraisal value. So what I've been advising clients is if you're willing to be a little patient, maybe we look at houses that other buyers are passing over because maybe they're in an area that you really like, maybe they have a lot that you love, but they need some work on the inside. Maybe they need updating cosmetically, they need a kitchen, they need a bathroom, they need paint, floors, a couple of walls moved or taken down. We work with lenders that can offer renovation loans where you purchase the home, you have a traditional mortgage, and the mortgage includes the money to purchase the home and to renovate it. So you're not going to Home Depot and using a Home Depot credit card to finance the renovation of your kitchen or bathroom. It's all part of your same monthly payment, and you work with a licensed contractor and we can help guide you through that entire process from the beginning, where we identify the home and then where we create a list and an estimate with your contractor of the things you'd like to change, and then work with your lender on a renovation loan.
Yeah, and the rates on those tend to be a lot better than if you purchase the home and then, like you said, get a Home Depot credit card, yes, where you've got a much, much higher rate. It will cost you in the long run. So the benefit of doing that is those homes are less competitive right now. Homes that need a little bit of work, they're gonna be less competitive, and then you can renovate them and get exactly the home that you want.
Yes.
Which, for some of our clients, we look at dozens of homes and they just aren't seeing exactly what they want. So for somebody who maybe is a little bit more particular about what they're looking for, there's also that added benefit of making sure that at the end of the day, you're ending up with exactly what you want.
Yes, definitely. The other option that we're encouraging our clients to explore with their lenders is the option of paying for points. When rates were at 3 or 4%, nobody really was discussing points. There was no need for them. But now points are allowing you to buy down your interest rate. So what is a point? A point is 1% of your loan amount, not the purchase price, 1% of your loan amount, and it allows you to discount the interest rate you're paying on your mortgage by usually 1/8 of an interest rate point. So it's an option where if you have additional cash to bring to the table, that you can use to maybe lower your interest rate to a point where your payment is a little bit more comfortable for you. And I think it's something we're encouraging our clients to look at. We're also talking a little bit about adjustable rate mortgages. Those have come back, and I know, Sarah, you've had a few clients that have had luck with those too.
Yes. So adjustable rate mortgages, they are locked for a particular amount of time, or you are at a set rate for 7, 10, 15 years. And then after that point, the rate could fluctuate depending on the market conditions. And there usually is a cap every year how much it can fluctuate. So it shouldn't go up, 10% in a year. But at any point during that time, you could refinance to a 30-year fixed if you like what the rates are doing or you're nervous. So it's something that's becoming a lot more popular again. It hasn't been very popular for about 15 years now because fixed rates were so good. And now adjustable rate mortgages are starting to come back in vogue, and they offer really, really competitive rates compared to your typical 30-year fixed right now.
Yeah.
So that's something that a lot of people are really starting to consider again.
Yeah. The other thing I want to mention is we have a couple of lenders now who can do creative financing. So if you perhaps don't have an ideal credit score, or you have a issue where you're self-employed and you've only had your business going for 12 months, or perhaps you're an investor and you want to use the income and the cash flow from the investment property that you're planning to purchase, we do have lenders now that can help with those sort of loans. So reach out, even if you think, I'm not sure if I can qualify for a loan right now, you'd be surprised we might be able to help you with some of these more creative solutions.
Yeah, and I've also made videos on first-time homebuyer programs, the Maryland Mortgage Program, which you should definitely check out. Those are just some more programs and incentives to help people get into homes. And I really feel that it is not too late this year to look into creative financing, really making sure that you are locking your rate. So if you've already gotten your pre-approval and you found that house, make sure that you are locking your rate. Because again, as they hike the rates again, you want to make sure that you are not closing on your home with a higher rate than you initially anticipated.
Yeah, absolutely. And I think even if you're planning to purchase 3 or 6 months from now, it's good to reach out sooner than later so we can connect you with lenders. You can talk about programs, and if there is anything we need to do to kind of help you get ready, we can have that conversation way advanced of when you plan to purchase. I think that's really critical.
Yeah, and obviously we do homes and farms, so we also have lenders who can help with commercial loans and agricultural loans. I don't know if you have any recently that you've found to be particularly interesting.
We work with a couple of different commercial lenders. So if you're looking at buying a farm that will produce income, and that income is how you are planning to pay part or all of your mortgage, we work with a couple of different commercial lenders. Farm Credit is certainly one of them, Sandy Spring, and a couple of others. Like I said, we also have more creative lenders who can do what are called non-qualifiable or non-QM loans. So reach out if you're not sure that your situation can work for a traditional residential loan. We can talk about that. And we have plenty of lenders as well that can do farmettes or even large farms if you plan to use income, let's say from a salaried position, to pay for it. If it's not a working farm that's producing income and it's not commercial, then we can certainly talk with some of our regular, residential type lenders about writing loans for those programs or for those properties. Sorry.
Yeah. So I hope we've convinced you that, it's not too late. It's not too late to look into some more creative forms of financing and things that maybe haven't been all that popular or all that necessary over the last 10 or 15 years, just because your traditional 30-year conventional fixed rate mortgage has just been the way to go. But now we're back in a market that honestly is starting to look a little healthier from our perspective. We're not necessarily walking into situations where our buyers are up against 30 offers.
Right.
But we are dealing with inflation and we are dealing with interest rates that are still actually historically quite low. But, coupling the fact that we have had such low rates for a few years and people have gotten used to that, and now you're also battling inflation, it's understandable that people are nervous. And I typically, when people ask me, should I wait? Should I buy the home? My advice is that we know what the market is right now. We don't know what it's going to be next year. No one knows what it's going to be next year or 2 years or 5 years from now. There are plenty of very smart people who try to predict what it's going to look like, but the reality is nobody really knows. So if you have the ability to purchase now and to get in a home and lock your rate, that's typically what I would recommend.
Absolutely, and inventory is going to remain low. So I think it's improving, but I think it's still very likely that, for the foreseeable future, it's going to be a low inventory situation. So if you're considering buying, it is good to start the process sooner than later.
Yeah. And the cat is agreeing with us. So, all right. Well, thank you very much for watching. I hope you found this video helpful. Again, we are the Homestead team of Hagen Realty. We specialize in homes and farms in Maryland, Pennsylvania, and Virginia.
Thanks for listening. Bye.